welcome back to Robinhood Stock Market Watch List. This is our new daily late night stock market meeting. Today is basically it is the end of the Tuesday the 29th going into Wednesday the 30th. Give me one moment here. So basically, as a lot of people are going to be watching this is basically going to be throughout the Wednesday morning during pre-market. So our new daily stock market meetings are going to try to focus more on what the next day is going to be like, where normally our weekend meetings are going over the entire week, which there's a lot of information when it comes to going over the entire week. That's why it's really important that we always know what's going to happen before it happens. So let's try to focus on what tomorrow is going to be like, or basically today for the Wednesday the 30th. So one of the most important things, as I always mention, as we do our due diligence, we always want to look at things that have the biggest impact on the stock market first, and then we kind of work our way down. So the things that have the biggest impact on the stock market, the entire stock market system, is going to be our economic reports. So it only makes sense that we start with that, work our way down. So the best website that we've always used is a website called investing.com. Plus, it's an application you can download to your mobile device. But we look at Tuesday, had its scheduled events going into Wednesday, August 30th, which has not happened yet. That's what we're going to look into next. But it's also important, if this is new to you, that we always know when these are going to be reported, because that is when we can expect a lot of volatility. There's volatility right before the economic report is released, right during when it's released, as well as after. So the more we know, the better of a trader that we can all be. That way there's no surprises. And so the times of these, looking at it on the website, is always going to default to the Eastern time zone. So basically, these are going to be reported 1 hour before the stock market opens, and then an hour and 15 minutes before the stock market opens. First one that's going to happen later, this morning, is going to be our ADP, non-farm employment change for the month of August. Now, the more rare that these are, the more volatile that it's going to be. So if it's a weekly report, it's going to be mildly volatile. If it's a monthly report like this, it's going to provide a good amount of volatility. If it's a quarterly report, it's going to provide an extreme amount of volatility, just like a yearly report can as well, because they're just not reported as often. And so we have a monthly, we have a quarterly one, just a wham, bam, and we're going to just get a lot of volatility here coming up really, really soon. Now, we can see right now that the U.S. futures, I just changed the page. Hopefully you guys can see my screen. If you haven't, if you don't, hopefully you can kind of dig in your software that we can pull it up. But the U.S. futures is sitting pretty decently high. We have the U.S. Tech 100 up 0.25%. The U.S. 500 is up 1/10 or almost so it's looking pretty good so far, especially at this time. They haven't really moved much, but some other clarifications with these economic reports is that they have a forecast. So sometimes if we look at too early, we may not see that, but it's always a good idea to compare the forecast with the previous, because it kind of lets us know if it may be provide bearish characteristics or bullish characteristics. Now, which sometimes can be confusing, because sometimes bad news can be good news, sometimes good news is bad news. And so sometimes it's hard to kind of predict, what week is it going to be? Is it going to be regular, like normal, or is it going to be bad news is good news, or is it bad news, or is good news going to be bad news? And so, but one of the ways that we can tell is because we're almost at the end of the year. We have three more interest rate hikes, and then we have most likely. I mean, well, let me rephrase that. We have three more interest rate hike meetings. It doesn't mean that they're going to increase the interest rates, but it does mean that they have dates where they're going to talk about it before the end of the year. Now, it's anticipated that they're going to do one more, which, I had a lot of people in the real estate industry tell me, oh, no, they're done. I'm like, no, they're not. I know they got at least one more up their sleeve. And so that's what's kind of, what the agenda is on that part. So as we get closer to the end of the year and closer to finishing these three remaining interest rate hike meetings, the closer that we can be done with it and focus on other things. And so that causes bullish characteristics with the stock market. So when we see, these types of, which would normally be bearish, results and provide bearish characteristics, they did the opposite. So bad news was good news because with the government trying to do whatever they're doing, increasing interest rates, trying to lower inflation, yada yada. I mean, it's all just a bunch of BS. But investors and people at Wall Street are thinking, okay, it's working. Whatever they're doing, it's working, blah, 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 because the numbers are now being less than the forecast or maybe even the previous. And so that's what investors in Wall Street are kind of looking for, and they get really excited when now things are starting to, go as planned. Kind of thing. And so this is where we're going to see probably more, bad news is good news for probably the rest of the week. And so that is why right now the U.S. futures is up. And that's also why we see that going into Wednesday, the ADP non-farm unemployment change for the month of August, the forecast is less than the previous. And the GDP, the quarterly report, which is a little higher than the previous, which, I think someone mentioned there is an issue with that. Let me see here. Yeah, no, I don't think there's an issue. So, but at the same time, this is kind of showing that, the economy is still strong, and, it's hanging in there with whatever, the government wants to throw at it. It does not want to go into recession. It does not want to do what, the government's trying to do. So this is where it's just going to create a lot of volatility, a lot of maybe mixed signals is kind of what I'm thinking. We should be getting just a massive amount of bullish and bearish characteristics. So we may see a lot of high market capital stocks be open in the green. We may see a lot of other high market cap stocks open in the red. And so, but it'll all pretty much kind of level out throughout the day. But it's also important to know what the rest of the day is going to be like. And so going into the pending home sales, this is for the month of July, is scheduled to be released 30 minutes after the stock market opens. And so, and typically the first hour and the last hour of every day is the most volatile times. And so 30 minutes after the stock market opens, it's just adding more fuel to the fire. And so, but with this though, we do see that the forecast is supposed to be negative 0.6%, where the previous report was in the positive 0.3%. And so this hopefully will provide that, bad news is good news effect, and still keep the market green for the majority of the day. And then so we have crude oil inventory levels, which is going to be released about an hour and a half after the stock market opens, is also going to show typically, so with crude oil inventories and unemployment report, these numbers need to be low because it's just showing, for crude oil inventories, people are driving, they're flying. That helps out the economy. Unemployment, if the numbers are low, people are working, they're spending money, they're paying taxes, and so that helps the economy. So these two things are the only really two things that where we need these numbers down low. So normally this would provide bullish. I mean. Bearish characteristics because the number is up higher than the previous, but we're still in the negatives, so that might be okay. Plus, it's a weekly economic report, so it's not going to be that potent compared to the rest of them, which are a monthly and a quarterly report. So this one, the market may not even really be affected by this one, but these three ones definitely they will be affected for sure. So Wednesday, definitely looks very, very volatile. And that's one of the reasons why I always recommend to straddle. Straddle both calls and puts because it doesn't matter what the stock market does, especially if we go into a day that's scheduled to be very, very volatile. It is just a great time, great opportunity to straddle both calls and puts because it doesn't matter if the market goes up or down. As long as it picks a direction and goes that way, it'll be a very profitable situation. And so that is basically what our morning's going to look like, other than earnings, which we'll take a look at here. But at this time of the day, during our meeting right now, the United States president and the White House has released their schedule. So let's take a look at what they have scheduled for Wednesday. So it showed Tuesday. I just hit the refresh. Now we have Wednesday the 30th that is on here. So typically this information is great to know what's going to happen during like power hour, right before the market closes, because it provides volatility. A lot of people like early this morning were like, how come the market's pumping? What's the news? Well, we are like the news reporter. We have to know what is going to happen before it happens so we know what to expect, just like a news reporter does. Journalists, they're all about the times and the dates and the schedule because it only makes sense that we got to know this stuff. And so there's not a whole lot, it looks like here. So we have the president receives their normal presidential daily briefing early in the morning, right after breakfast, and then we have the press briefing. So this is the big one right here. So this is where we have the White House that goes live in the press briefing room, and they'll pick something to talk about. And so it could be something that may help the stock market. Maybe they could start talking about companies. Ford Motor Company. Oh yeah, they're building a new factory. They're gonna hire 4,000 new people. People and blah blah blah. And then all of a sudden, the automotive industry starts going up or whatever. But it's just important to know these times, because all of a sudden you'll notice that all of a sudden the stock market is surging up, or maybe it's plunging down because somebody said something that either investors wanted to hear, or maybe they scared the investors and said something they didn't want to hear. And that's why it's really important that we start listening to this stuff live, because it gives us an advantage. Before the journalist creates a little news article and then posts it, blasts it out there, all of a sudden now you're 5, 10, 15, 20, 30 minutes late. And that is not like us. We're never going to be late because we always know what's going to happen before it happens. And so this is going to start, and a good way to kind of start tapping into this is go to YouTube, type in White House Live, maybe 15 minutes before this is released, or this is broadcast. And same thing with Biden. If it says the president delivers remarks on the whole of government response and recovery efforts of Maui, Hawaii, and our ongoing response from the federal government to the hurricane, whatever that they're calling these hurricanes. And so the stock market does not normally like Biden. And so it's one of the reasons why the stock market went up today, is because Biden didn't really, start. I mean, he did, it was later on, but, I can't remember if it was after the stock market closed or not, but it wasn't really anything that, he could say to really, that really upset the the market. But that's why we want to kind of listen into this kind of stuff, because I think with whatever he was talking about, he's talking about lowering health care and stuff for seniors or whatnot. But this could potentially maybe piss off people or investors, or maybe it could be the opposite. Maybe this could pump up stocks. I know, with this whole issue going on with Hawaii and, a lot of the speculations of things, and conspiracy theories, I'm with that. I'm with you. And I got my own little theories and whatnot. But as an investor and trader, we have to kind of sometimes think out of the box. And investors or Wall Street could potentially look at this as a bullish meeting, because with the whole land grab, theories, they're thinking that not Jeff Bezos, but like Amazon or other, major companies may want to tap into that, because there's all these rumors about building a smart city, there or whatever. So there could be clues in here that they could be talking about. They mentioned companies that are listed in the stock market. Those companies are instantly going to get they're going to surge up. So that's another reason why we need to listen in on live on YouTube on these, because that way we can see what's going on, what are they saying, and are they mentioning any companies? Are they saying something investors want to hear, or are they saying something investors don't want to hear? These are key things that we need to really listen onto when we're tapping into this stuff. So that is what kind of covers, the market throughout the day. But then all of a sudden we have our economic reports right before the stock market opens and then right after it closes. And so for Wednesday, we have the four major ones that we'll go over are pretty much going to be after the stock market closes. And the main one is going to be our CrowdStrike, Salesforce, the Okta, whatever, and Chewy. And so, but there's more, going on to Thursday, but we'll focus more on that on tomorrow's meeting. So with the four that we have here that are part of their top 10 most highly anticipated earnings for this week, let's take a look at those and see what we've analyzed. So with the CrowdStrike, which again is scheduled to be reported Wednesday after the stock market closes, and it is expected that they'll beat their estimates. Now, CrowdStrike, the investors are bullish going into the company's earnings with almost a 85% expecting an earnings beat. 85%, that's huge. Option traders are pricing in almost a 9% price movement in either direction. Normally it moves right around 7%, but we're anticipating a little bit more volatility with this one. And hopefully that 9% is, 85% is expected to be going up. So that's good, and they're a cybersecurity, program. And so, it's extremely in demand right now because of all the growing threats with computers and networks. It's only going to help their business. And so Salesforce, which is also expected to release their earnings Wednesday after the stock market closes, and is also expected to beat their estimates. Investors are bearish, though, going to the company's earnings release, but with a 73% expecting an earnings beat. And normally these percentages are right around 65%, I would say is right around average. So I would say the percentage is a little bit higher, but investors are bearish. And but sometimes people can kind of get a little confused on that. Why are they expected it to beat, but investors are bearish? Well, sometimes if we pull that kind of stuff up on a graph, all of a sudden we'll notice that their share price is really, really high. So in that kind of situation, investors may already price in that share knowing that it's going to beat, especially with a pretty high percentage ratio. And so and a lot of times we'll see that they'll beat their revenue or earnings, EPS, whatever, and all of a sudden their share price starts going down. People are confused. How come that it's going down? It has good news. Well, it's one of those situations: buy on rumors, sell on news. But also, it's already priced in. If it's already high, I mean, very unlikely is it going to go up. And sometimes in that situation, it needs to come down before it can keep going back up. And so. And so just know sometimes that's how it works, and just know it, especially if you're new. And so there's the Okta, which you can kind of see within the pictures. They're more in the the computer world as well. And so they're also going to be releasing their earnings Wednesday after the stock market closes. Also expected to beat their estimates. Investors are bullish going into the company's earning release with a just under a 72% expecting an earnings beat. Option traders are pricing some pretty good volatility with this one, as well as about 12.5%. But in recent quarters, it's moved right around 17%. So we're expecting a little less volatility. Then there's Chewy. Chewy is expected to release their earnings Wednesday after the stock market closes, and expected to beat their estimates. Investors are bearish going into the company's earnings release with just under a 72% expecting an earnings beat. Option traders are pricing in right around 14% price movement, where normally it's moved right around 13%. So we're expecting a little bit more some volatility with this one as well. And it was one of those pandemic stocks that was extremely volatile. And so it's just been kind of really, volatile ever since then. And so that's kind of the main earnings that we're expecting later, for Wednesday. But also kind of wanted to kind of go over some activity with you guys on this Tuesday. And so with the stock options activity, Tesla, like always, dominates the list at right around 2.5 million in options volume. But out of that volume, 55% has a call ratio, where 45% is in the put ratio. Nvidia, second place, with about 1.3 million options volume at right around 57% call ratio and 42% put ratio. Apple, third place, is right around 61% call ratio and about 39% put ratio. So basically, these are our top three most active stock options. And as I've always shared my straddling rules and guidelines, you always see that always straddle the top three, or sometimes the top five most highly active stock options. And the reason why I have that as a rule and a guideline is because that's where the money is. That's where people are trading the most. You can see it right here. The numbers don't lie. And so you go from the third place, Apple, at 1.1 million. Fourth place is less than half of that. And so when we have where the majority of the money is there, and the majority of the volume, which the volume is always the current day's buying and selling activity, that it's going to maintain the value the most. It's going to have the least amount of depreciation. So if we can kind of control the depreciation a little bit, we just have to know how to do that. How to get into certain opportunities where it has the least amount of depreciation, and that's how we kind of do it. We do that. And with try, and I always recommend to avoid the ETFs, or like the ETFs, which is very common. People will do SPY, and they just hear a lot of people do it, and they just kind of follow the majority on that. But SPY ETFs have 3 expiration dates per week. So if there's 3 expiration dates, where normal stock options have one expiration date, ETFs with 3 has 3 times more time depreciation. So we can avoid that by avoiding ETFs. ETFs are good if you're day trading, getting in, getting out, but not really swing trading, because it's just got a lot more time depreciation. So we can avoid that. We can avoid things with less volume, which will have more depreciation. So we focus on the majority, always follow the money. And right now, that's Tesla, Nvidia, Apple. And sometimes if we see a manipulated stock like AMC or GameStop, show up on there, we can take that off. Make that we can, and that's part of my own rules. I don't share that, but it is one of my rules, my guidelines that I use to avoid manipulated stocks because they're manipulated. They will have a lot of time depreciation in there as well. So, but NEO made it on the fourth place only because they had earnings early in the morning, and it plunged down to like -7%, and it did a good job, recovering. And because NEO is worth so much more. The only reason why NEO is down is because of the current president that we have right now. If we had a different president, it would be a completely different story. But NEO, the company, really relied on a lot of American semiconductor microchips, and Biden cut China off on like all of our American high advanced microchips. So investors didn't like that. And so that's why it's worth what it's worth. But if we ever get a different president that changes those policies, NEO is going to make a lot of people a lot of money again. And so, but NEO today had 70% call ratio. That is good. A lot of people knew that NEO was going to recover, and it did, and especially going into the next day. So a lot of times when we can look at this on the bar chart website, we know what's normally on here because they're like regulars, and then we know what's not normally on here because we don't normally see them on here. And so, but that can be considered as an unusual activity, as well as things where the ratio is completely more higher on one side over the other. And so for example, so the Marathon Digital Holdings has a high percentage ratio. I mean, it was up a lot today. It was up $3, which is almost just under 29%. But it has about almost a 70% call ratio. So people may still be bullish on this and buying more calls going into tomorrow. But then we have the Palantir Technologies, PLTR, which is up only 5%. But we have 78% call ratio. That means like 4 out of 5 people are betting this stock is going to go up the current day as well as maybe even the next trading day. And so, this is a gold mine, with a lot of this information. This is our radar. This, nothing flies under the radar. So we can really see what's happening. Even Riot Platforms right here. It was up almost $2, $12.30 is where it's currently at. 80% call ratio, very, very high for that, but still pretty low volume. But this isn't a stock option that's normally on the list. So that's how we can kind of decipher if it's unusual activity or not, because normally it's just regulars, 50-50 call put ratio, sometimes 40-60 ratio. That's normal activity. And so this is a great page. This is on the most active stock options list under options in the bar chart website. But there's another area we can kind of do a little more due diligence on, and that's going to be the options volume leaders page. So if I click on that, it's automatically going to sort it out by volume, which again is the current day's buying and selling activity. And so we have the expiration date. We have the DTE, which is the total number of days until the option expires. So we can see that basically all of these, which is the most active calls and puts, all expire this Friday here in 2 days. But out of this amount of activity, we can see that Tesla, the $250 call strike price, dominates the list. But Tesla being at $257 is already in the money. So we need to try to find a higher one to kind of anticipate, is it going to keep going for the rest of the week? Which I do see one here, and it is growing. We have a $260 call strike price, but it's not that much compared to $257. I like to see something like $265, $270, $280 would make me feel a little more comfortable, but I'm not seeing that. So it's almost at the money kind of situation. And so, but that tells me that going into the GDP report, our economic reports early in the morning, that they're most likely they're going to be straddling. These guys are straddling, and they could be straddling, 50-50, but look at the call and put ratio is pretty much 50-50 right here. If we just kind of round up a little bit, we're 50-50, not taking any chances. We're going to straddle and calls and puts. And you can still straddle both, calls and puts, or strangle, at different strike prices. It doesn't have to be the same strike price. But as long as it's within the realm of the share price. And so, and we do see a lot of calls and puts. So basically, a lot of people are straddling because Tesla is very, very volatile and can provide a lot of great gains and profits just by doing that. So, but we do see an Apple call, which Apple's right now $184. We have a $185 call strike price that all have a tremendous amount of volume that exceeds the open interest. And if you're new to stock options, open interest is basically the total number of open contracts for the previous day that have not been liquidated yet via offsetting trades, meaning that the open interest was prior from the current trading day's buying activity that have not sold yet. And so when we see the volume exceeds the open interest, that means that it is more buying activity that exceeds it. Because if it was less than the open interest, then that means that it could be selling activity. We don't always know until, the next day, until we see what was the open interest higher or lower than the previous day. But when we notice that it's high, the volume for the current day is higher than the previous days, that means it's showing more interest, more desirability, and more value. And so, but sometimes we can see other activity, especially if you're more in a long-term, shorter-term type of scenario. Maybe you can't watch these, throughout the day, every day. No problem. There's a strategy for everyone, especially with stock options. So instead of it automatically sorting out by volume, let me make sure I'm not forgetting anything here. I think we're good here. Let me see here. Okay, so is to click on open interest. So let's sort it all out by open interest instead of volume. Because volume, again, is the current trading day's activity. Open interest is an accumulation throughout its existence of that particular option with the strike price. And so when we sort it all out, AMC is definitely number one. People are betting against it. AMC is drowning. And so, but it's a manipulated stock. Let's avoid it. I'm not even going to look at it. ET, which is basically on the top of the list, with ET, which is currently at $13.50, we have a $50 call strike price that expires next January, which is just several months from now. We have a high accumulated open interest of over 200,000, and the current volume is 6,900. So it could add it to that, or maybe it subtracts it, when we look at the report, the next trading day. Most likely it's probably an accumulation because it hasn't reached $15 yet. Usually once it does that, people start selling and start figuring something else out, or a higher strike price or whatever. But if you're not into stock options, you can still look at this as, what shares should I buy? Because maybe we're looking at something, for example, like this. Bank of America, or BAC, which is currently at $29. We have a $35 call strike price that also expires next January. So if you buy shares for $29 and it gets to $35, you just gain 20%? Just by holding shares. And not only you're holding on your appreciating asset, but it could be an asset that could be paying you dividends every 3 months. So they're going to pay you just because you're holding on to their appreciating stock. And so, and each stock or a contract, if you did do the options, if we did the let's go with the asking price, was basically at $23 per contract. If it gets to that, it could go from $23 a contract to $230 a contract. So you just gained 1,000% if that actually happens. Or like I said, just buy it in shares and make 20%. It just depends on your strategy. But like I said, this is a gold mine that we need, that I recommend using. It's just sometimes you just need someone to kind of, point things out, that way you can kind of get nudged and, and kind of learn from it. But there's more information here that I always point out. Look at this. So Tesla, which is currently at $257 a call, we have an $825 call strike price. That also expires in January. I know it's a far-fetched that Tesla can get from that to that. However, I've seen some stranger things happen before. And I've seen Tesla do some pretty amazing things before in the past, all due to manipulation and all kinds of stuff. So we have to think, how can Tesla get to $257 to $800 or even close to, it doesn't even have to get to that far. It can get to $500 and it could still make a lot of people a lot of money, even with this particular call. Because each one of this contract is only $23 a contract. If it gets even to $500, again, that $23 contract can easily get to $230 a contract. So you just gain 1,000%. But one of the reasons why I believe that it could reach that amount is because Elon Musk in the past has mentioned and wants to manufacture a $25,000 EV car, a $25,000 Tesla. When Tesla first came out, it was over $100,000, and then we started coming out with like $70,000, $80,000, and then the Model 3 came out for like in the mid $40,000 range. Every price range introduces itself to a different type of customer. So when you introduce a $25,000 vehicle, now you have a vehicle for someone that's maybe right out of high school, where their parents can co-sign for them, someone that's a college student or someone that's right out of college, or maybe an Uber driver, something to where, but if you ever watched Elon Musk reveal a Tesla live, it's pretty interesting. It's unscripted. They do and say whatever that they want, but they do have an agenda. But at the end, he always says, now you can go to Tesla.com and reserve this vehicle for $500 up until the last reveal, which was the Cybertruck. He said, now you can reserve this Cybertruck for $100. And I was like, $100? It's like, can he do that? I was like, but then this guy could do whatever he wants. But then I was also thinking, anybody, an 18-year-old with a $500 credit card can easily reserve that Cybertruck for $100. And I knew that they were never going to manufacture that vehicle for many years to come, but he still used that data and manipulated investors in Wall Street, saying we had record-breaking reservations. And investors were like, oh, we got to buy more shares, buy more stocks. And all of a sudden, it just surged like crazy. Elon Musk and Tesla are due for that again. And this could be the year where that could happen. And it's anticipated that they could do that during their artificial intelligence day, which I think is sometime in September. They could surprise us with all kinds of stuff. Also, the other thing, talking about AI, is another reason why we can go from $257 to $800, not so much $800, but let's be realistic, let's say $500, is the Optimus, which is their droid that they want to mass produce. And I'll show that to you here if you haven't ever looked at it. Let's go Tesla Optimus. They've had a couple different versions, year after year. This was one of their first versions that they kind of had in mind. And then they've had a couple other ones. This was their second version that they revealed last year. However, it was also untethered. It was untethered, meaning where it can walk around freely and do certain things. And then this is their newer one. So it's starting to kind of come together now. It's still untethered. They did a little demonstration thing for us, a video earlier this year. And so, but it's just a matter of Elon Musk saying or revealing this again live and going over another demonstration. It's just a matter of time where he will say, now you can go to Tesla.com and reserve your Tesla bot or Optimus or whatever they want to call it for $100 or $500 or whatever the amount that they decide on. And then it's a whole new ball game. No other company has done this yet, taking millions of reservations, because Elon Musk wants to mass produce this for residents and for industries. For residents, this is going to, again, look at this. Built by humans, for humans, friendly, eliminates dangerous and repetitive, boring tasks. The height is expected to be right around 5'8" and be able to carry 45 pounds. Its weight is going to be around 125 pounds. Deadlift is about 150. Speed is about 5 miles an hour. Arm extended lift is a weight is going to be about 10 pounds. So with 45 carrying pound weight, this robot can do a lot of stuff around the house. It can lift things, or maybe in industry. Amazon can use this for their facilities, but it's going to cost a lot of people jobs, but it's going to help companies with more revenue and whatnot. So we're going to see a lot of companies. It's going to be crazy. It's going to be very futuristic. It's going to happen. It's inevitable. It's going to happen. But do investors see that this is going to happen sooner than we think? Is there inside information? There's an accumulation of open interest here for some reason. And it's either this $25,000 car, or it's going to be this this robot that, and it could be both at the same time. Now guys can go to Tesla.com and reserve both of these at the same time. Maybe they'll probably do one this year, maybe another next year. So the other thing is Elon Musk is mass producing a gigafactory in Mexico. And so it's just a matter of time when that's done. And we've seen what that does to Tesla stock when he builds another gigafactory. All of a sudden he produces record-breaking vehicles and record-breaking sales and deliveries. And it just, if he builds it, they will come kind of thing. And so there's a reason why people are betting that Tesla's going to reach this much so soon. But something big is going to happen, but I've kind of laid out what their agenda is and their plan, and it's inevitable. It's just a matter of it's not a matter of if, but when it's going to happen, and this could be the year. As well as the Apple is very, very secretive about some of their projects. They're still getting in the car business. They're still designing an electric vehicle. It's just a matter of when they're going to reveal that and also take reservations. Now, this idea that Tim Cook finally decided to get into was, I think, sometime in 2019. And so, but typically when a company starts, talking about this, we start seeing something after a couple of years. However, we did have COVID during 2020, which would have probably set a 1-year delay, which means that we should be seeing something this year. And Apple did just recently release their Apple iPhone reveal date. Right? Yeah. Apple sends invites for the September 12th launch event for the new iPhone 15 that's expected. And so if any of you have ever watched the iPhone X reveal, it was a surprise. And so it was all about the iPhone 8. iPhone 8 small, large, medium, whatever. iPhone 8 color. We got this white, black, silver, whatever, gold, whatever. And so all of a sudden, it looked like that the event was about to be over. But then all of a sudden, Tim Cook says, "But wait, we're not done yet. I have a surprise for you." And all of a sudden, it was the iPhone X. And even though I was kind of jokingly commenting to myself, I'm like, what happened to iPhone 9? We skipped from we go from iPhone 8 to iPhone X, but it was still a surprise. And investors in Wall Street weren't expecting that. And so, but it's been a while since we've seen that out of Apple, and we are also due for something like that. And so what a perfect time to really provide a grand finale for our bull season, or the bull market, because typically the bull season is the third quarter, or the summer season. And so, and typically when we see a lot of these tech companies that reveal stuff, usually this is stuff that we already know is going to happen anyways. So the stock values usually price themselves in. And so usually we see the stock kind of plunge after the reveals, because now it's done, it's over for the year, and now we gotta wait till next year, kind of thing. So that's how the investors and people feel like. So they'll sell while it's high, and then that way they'll maybe get into something else, or wait till next year, or whatever, or during the winter season when things are low. And so, but I anticipate that could be different this summer. So instead of things plunging, if they show things that if they surprise us and surprise Wall Street investors, we could see kind of an extension to our bull season, in our bull market. But also just know, I'm going to pull up our stock market calendar, which is extremely important to have. So going into September, look at this here. So September 15th is a Friday. So that is a triple witching day. And so that is a very, very, a very bearish day. And the reason why they call it triple witching is because of a lot of things expire. And so so it forces a lot of people to do a lot of selling activity. And so, but it's interesting because, okay, so September 12th is the Apple reveal date. And then, so that is going to be on a Tuesday. So Tuesday, and then Friday, everything is gonna plunge. But we'll talk more about that later on here, throughout our other meetings. But just know that this is a very, very bearish day. No matter what you read, it may manipulate you, but just know I've never seen a bullish a triple witching day. And so, but the first time for everything. And so, but I highly doubt it. But it gives us an opportunity to know what's going to happen before it happens, so we can take advantage of it. But just know that is coming up here in just a couple weeks. But we'll go over that here more later on. And so going back to the open interest, let's take a look if there's anything else other than the other ones that we talked about. And also this has been kind of slowly getting on the list is gold. And so gold, which is this particular stock, is at $16.34. We have a $20 a call strike price. So from going from that to that, that's what even if you're holding shares, is like a 30% gain. And so, but it still makes you wonder why. I've never really seen the gold stock slowly accumulate open interest. And so, but it is interesting, about that. And I think gold value may be going up in general. But that could be due to some other activity going on in the world. I did post some things in our politics chat room, some videos that pertain to some of the activity that the that the BRICS are doing, and so they're trying to establish more countries under their little program. But so let's see if there's anything else here really quick. The Alibaba. I noticed this earlier today. The last couple of days have been accumulating more open interest. Alibaba, which is China's Amazon, is currently at $94 a share. We have a $200 call strike price that also expires this January. So Amazon does very, very well during the holiday season. We have the holidays coming up with November, December. We have the Black Fridays. We have Christmas holidays, all that stuff. Well, China likes to kind of participate in some of the the holiday season, as well as Alibaba. And so Alibaba has been pretty beat up lately. And maybe it's time to shine, and we may see Alibaba go up quite a bit. And if you're buying shares of Alibaba and it gets from $94 to $200, you just made yourself a 100% gain in a matter of a couple months. And so unfortunately they don't pay dividends or anything, but 100%, you can't complain. And so it's a great way to kind of get in and get out, and then to re-strategize in something else. But we can always find some great opportunities, especially like PLTR, Palantir Technologies, $15.40 a share. We have a $20 call strike price. This is nearly a 30% gain, also in a matter of a few months. And so it's just a great way to kind of look at some more opportunities here. So hopefully this has been very, very informative. I will upload this to our YouTube channel for our future reference. Anybody have any questions, want to go over any information, or have anything to bring to the table? If your mic is unmute, you can go ahead and unmute and start talking. Or if you want to share your screen share audio, it doesn't matter. This is kind of like our round table. Everyone can participate. No, we are good. All right.